Onto your markets news now. Asian stock markets were mixed on Thursday. Traders remain cautious about the escalating tensions in the Middle East following Iran's ballistic missile attack against Israel. The Nikkei share average rose by 1.97%, while the Hang Seng Index took a breather from the good run, falling by 1.5%. Chinese markets remain closed due to a week-long holiday. US stocks were subdued, falling by 0.33% during the trading day, although they managed to end just above the flat line. This as tensions in the Middle East weighed on market sentiment. To make matters worse, a local jobs market report indicated that the labour market was more resilient than previously thought, which could mean that the Fed may not be so aggressive at its next FOMC meeting in cutting rates. The Dow Jones Industrial Average rose by 0.09%. The S&P 500 added 0.01%, while the tech-heavy Nasdaq closed up 0.08%. The JSE is trading lower today, with the all-share index falling 0.8% to 86,382 index points. The rand is trading at 17.47 against the US dollar, 22.92 against the British pound, and 19.29 vis-a-vis the euro. Gold is trading at $2,646 an ounce, while platinum's trading at $997 an ounce. Brent crude oil trading just above $75 a barrel. Well, to break down the markets for us, I'm joined by Roy Matuni. He's a portfolio manager at Sanlam Investments. Thanks very much, Roy, for joining us. So it seems that most of the focus right now is on what's happening in the Middle East. What's your reading of the so-called volatility index?
Hi, Nomfa. Thanks for having me. So the volatility index, or the VIX, measures what it says, volatility over time. It's a combination of a variety of variables. But what typically is, over the long term, it trades at around a 20 index point. For the last couple of months, it's been about 11, but you've seen it head towards that 20, which I think just compounds what we are seeing around geopolitics, the fact that the US is heading into what you would call a dead heat, very difficult to call, and everything that's happening in the Middle East. So volatility definitely rising, negatively influencing equity markets. You can see even bond yields starting to rise again. So tensions are up. And that has driven the volatility index upwards.
Yeah. I see the oil price is sort of remaining steady, hovering around that $75 a barrel level. And the reason that we keep referring to this is because it's not an item that one can really afford to take one's eyes off because of what's happening in the Middle East.
No, absolutely. I think if you look at it from a longer term perspective, we're probably in a situation where there was excess oil, and that's why the OPEC members had all curtailed their production to try and support prices. But with all the tension in the Middle East now, you've seen that oil price picking up. And the reason why that is because something like 30 or 40% of all the oil that's consumed, that's produced in the Middle East, passes through the Straits of Hormuz. Anything that blocks those would mean that 30 or 40% of oil production gets out of the market, and that would take oil prices skyrocketing. I think that's what the market is fearing, particularly now that you've had all of this Iran and Israel agitation on the go. So definitely well worth watching, and that's why I think the oil price is edging upwards.
Yes, I know we're down at the moment on the local all-share index, but generally speaking, despite the geopolitical concerns, the local market has been doing quite well. Is that all to do with the positive sentiment for South Africa Inc., do you think?
I'd say there's a couple of very positive things. The first thing is bond yields fell quite significantly. Bond yields are used to price future earnings. Previously, bond yields were at about 12.5. We've just hit 10, slightly worse than 10 now. So that 20%-ish difference in bond yields is reflected in share prices. As well, relative to the rest of the world, we were quite cheap. So when the rest of the world was rallying, our stock market was pretty pretty quiet, muted, to say the least. So now that the positive sentiment is coming through, interest rates have started coming down, you start seeing those valuations beginning to expand and us beginning to rally, somewhat idiosyncratically opposite to what's happening in the rest of the world. Yeah. Share prices have moved. So I think investors need to be quite careful, because now I think we're beginning to price some earnings growth over the next few years, over and above what we were forecasting before.
So what about Naspers? I mean, Naspers is a big one. It's one of the, the big stocks that has massive market valuation. It's gone berserk. It's trading at around 4,300 Rand a share. What are the dynamics behind that? Or is it all tied in with what's happening in China and the fact that there was stimulus there? And obviously when tech does well in China, Naspers does well.
So I think there's 3 steps to this. You're absolutely right. It's a big bellwether indicator for the tech market in China. But then when you look at the constituent investments, Tencent is the biggest driver there. Tencent is actually up about 55% in the last 1 year, maybe about 30% in the last 1 month. And a lot of that has been due to improving earnings. So it's re-rated a little bit, so it's become more expensive, but its earnings have also grown. And in addition, over the next 6 to 12 months, I think the market's still expecting 30% growth in earnings. So the market actually does like this stock, the Tencent stock. Then when you put it in Naspers is trading at a discount to what you would expect, because it's a holding company. And there's this perpetual buyback. So you combine the positivity around China, the discount to NAV, the growth prospects of Tencent, and this buyback, then you have perfect conditions for a market rally in the stock, both this one and in process. Because for us as South Africans, there's not many ways you can play the China story.
Yeah. All right, Roy, we're going to leave it there as we've run out of time. But thank you so much for your time and insights. Roy Mutuni, he's a portfolio manager at Sanlam Investments.